The IRS just clarified a brand new deduction that could save you up to $2,400 per year if you bought a car with a loan. You don't need a Tesla, you don't need to be rich. If you got a payment on a new American-made car, there's up to a $10,000 interest deduction sitting in front of you, and 99% of people have no idea it exists. In this video, I'm going to show you exactly who qualifies, how much you could actually save with real examples, and how to claim it before this thing expires. My name's Tony Hong. I'm a licensed CPA and founder of the CPA Dude. My team files and reviews thousands of returns every year for business owners, real estate investors, and high income earners across the US. And we've been deep in the weeds with the one big beautiful tax law changes. This is one of those rare situations where regular people can pick up thousands of dollars just by knowing the rule and following the steps. All right, so I'm going to show you how this exactly works. Then we'll run your numbers and see what this means for your situation. So let's dive right into it. So this is going to be the car loan interest deduction. So if you got a car payment, this is going to be for you. All right, and this is going to really break down into two things here. Is going to be a yes or it's going to be a no. And this is how you're going to determine what way the tax law is going to work for you here. And the things you have to answer is, was this an American-made car? And you financed the car, key date here though, after 12/31/24. And was it brand new? You're gonna have to hop through all those in order to start qualifying that. If you do though, you can get up to $10,000 car loan interest deduction. But if you don't meet any of those, this is gonna be a big fat zero that you cannot write off any of your car loan interest. Like I mentioned on the requirements, let's just dive into these real quick here, is that it has to be a new car. It cannot be pre-owned. They're trying to incentivize you to jumpstart the American economy here. Two is that it's made in America. Now this is a pretty subjective part because even foreign cars actually qualify for this as long as that you have the final assembly in the US. That's gonna be the key part here, is that you have the final assembly here. What you can do is just check this VIN or your manufacturer's website to figure it out. So we got one, we got two, we got three. Now this has to be personal use. It cannot be a business vehicle because this has a whole other set of rules related towards that. But if you do have a business, that is a great way to take advantage of it. Another one that you have to do here is that you have to finance it after 12/31, so after 12/31/2024. And lastly, there's going to be an interest cap, and this is an interest cap of $10,000. Most of you won't even hit it up that high, so you're going to write off the most of it here. And we're just going to assume here that we're talking about more of the middle class that's doing this here with a 24% tax bracket. So in this example here, if you have a 24% tax bracket at $10,000, that could be up to $2,400 in tax savings for you per year. So now you see the mechanism, we're going to plug in some real numbers so you can see what this looks like for a Camry, a truck, and a high-end car. But quick thing before going to examples, if you got a car loan now and you're planning to buy a car in the next year or two, and you want to know, do I actually qualify for this? How much would this save me over the life of my loan? And what other 2026 changes you're not using yet? We can walk you through that on our tax savings blueprint call. On that call, my team will review your current or planned car loan, estimate your savings from this new deduction, and review the rest of your situation for legal IRS compliant moves you're probably missing. And because we stand behind our work, if we don't find at least $3,000 in tax saving opportunities across your situation, we refund you what you paid for the blueprint, no games. If you want that for yourself, hit the link below and grab a spot. All right, let's look at some real examples now. All right, so we're gonna have three different people that are gonna be buying cars all at the same time and showcasing you what that looks like here. So the first person that we're gonna have here is gonna be our example one. They are going to buy your good old sedan. 4 doors, 4 wheels, point A to point B. Real easy to get there. And my weapon of choice is going to be the good old Toyota Camry. Old faithful, old reliable, always works. And the details of this, it's going to be a $32,000 car with a 5.5% interest loan. And the interest paid on that each year is about $1,760. And the good old tax bracket is going to be 24%. So that means with this, they'll be able to deduct the $1,760 of interest each year. And against their tax rate, that's about $422 in tax savings that they're able to get each and every single year. So it's nothing crazy, but you multiply this over 5 years, because that's how long your note is on your car, that's about $2,000 in tax savings that you're gonna be able to get. So let's go into example number 2 now. You're like, okay, a Camry's too small for me. I need something a lot bigger. I gotta haul stuff. And what do you get? The good old truck, right? Trucks are great, actually. I wish I had one again, just because I can just throw anything in the back. It gets damaged, I really don't care. So, good, what old truck do we get? We get the F-150. And the F-150, let's just say it costs around $55,000 for the car. We're gonna have an interest rate about 6.2%. On that side, we're gonna have about $3,400 in interest paid each year. Once again, we're in the middle class here at a 24% tax bracket. How much is this gonna save you? It's gonna save you around $118 in taxes every single year. So once again, not gonna be life-changing money, but hey, over 5 years here, this is gonna add up well over to $4,000. Wouldn't you want $4,000 back in your pocket just for taking advantage of the tax rules? And now we got example 3 here, and then this is the good old bougie person here, and they're gonna be the luxurious car here, right? They want luxury, they work hard, they live in their car, they want something very fancy. And our weapon of choice here is gonna be a good old Cadillac CT5. On that one, about $65,000 for the car, 0.8% interest on this car, and that's gonna come out to about like $3,100 in interest each year. So this is actually gonna start adding up for this person. However, they're in the 37% tax bracket, so this is gonna add up even more for them. This is gonna be about $1,154 in savings each year. Once again, by 5 years, we're well over $5,000 in savings here. So these tax law changes, they're really starting to add up depending on which vehicle that you buy. All right, so now I want to compare person 1 versus 2 versus 3, and how much are they paying? So in this scenario here that we've outlined, they're gonna save $400 a year on their taxes because they're able to write off their interest. Person 2, they had about $800 that they're saving in interest, and then person 3, they had $1,100 of savings. And all of them are just doing what they're gonna do and buy a car and make a payment. The only difference is whether they know how to claim this deduction and whether the car and loan are structured correctly. So now we're gonna write, we got all these deductions up here, is how to claim it. Because if you do all this, we've taught you all this and you haven't taken any action, it's not gonna help here. So I'm gonna give you a simple checklist for actually claiming this. Step 1 that you're gonna have to do is that you're gonna have a qualifying American car on this side. So this is gonna be a car that is finally assembled in America, and it's gonna qualify for that side. If you don't know how to do that, check out the VIN or the manufacturer's site to make sure it all counts. Now step 2, what you're gonna have to do here is that you're gonna have to finance it with a loan. And that loan has to be after 12/31/24. So if you bought this in 25 or 26 as we're speaking right now, you're totally fine. On the step 3 now, you have to get your annual interest report from your lender. This is gonna be the key part, because unless you wanna do the math, which is no fun, just have them do the math since you're paying the interest for them. This is gonna be the key number that you're gonna report on your taxes, which leads us into good old step 4. You have to claim the actual deduction on your tax return. So if you don't claim it, you don't get it. So you can either work with a tax pro who will do it for you, make sure if you're using TurboTax, you actually get it. Otherwise, all the work you've done is more or less useless. This is gonna go on your good old Schedule 1A, so look out for that when you're filing your taxes and reviewing your tax return. And step 5 here, you'll actually see the magic by having it reduce your taxable income, which will then knock down your tax bill. And big thing here though, this is gonna go away on January 1st, 2029. So if you wanna do anything between now and then, now is the time. Otherwise, this tax deduction is not permanent. So you got roughly about 3 years left for this to buy a qualifying vehicle and get multiple years of savings out of it. The earlier you make the decision, the more you get a benefit. So here's the bottom line. If you're planning to buy a new car in the next few years, or already financed a new American-made car in 25 or 26, then this deduction could be worth thousands of dollars to you over the life of that loan. And this is one change. There are dozens of others across your business, real estate, retirement, and family situation that either save you money or quietly cost you money if you ignore them. If you want help making sure you're not leaving free money on the table, here's what to do next. Click the link below to this video, pick a time for a tax savings blueprint call with my team. On that call, we'll check if your car loan qualifies for this new interest deduction, estimate your total savings over the life of your loan, and walk through 2 to 3 other legal IRS compliance strategies you're probably missing. We back it up with a simple guarantee. If we don't find at least $3,000 in tax savings opportunities for you, we refund you paid for the blueprint. If we do, you walk away with a clear written plan to implement with us or your existing tax pro, your choice. So if you got a car payment or you're about to get one and you don't want to tip the IRS more than you have to, click the link, book your blueprint call, and we'll help you keep more of your money.